stock from the cement pack, that is Ultratech Cement, that particular stock too has now gone ahead, hit the day's lowest point. But like we promised, it's now time to speak to an important corporate guest. Rajesh Sharma, the MD of Capri Global, joins us now. Mr. Sharma, thank you so much for joining us. Q2 was quite strong for you. In fact, it was so good that you managed to go ahead and increase your AUM guidance for FY26, implying an 18% growth in the second quarter. Which segment are you currently seeing the growth coming from?
Yes, thank you. So growth is coming from all the segment, but more of the gold loan because we added more branches. If you see, last quarter we added about 86 branches, and gold has become almost about 40% of the overall AUM. Now, gold specific branches about 850. So with those branches, I think gold is growing, and further there is a cultural shift. Borrowing against from the gold is now getting more popularized and more acceptable, where in the semi-urban rural area, people don't hesitate to meet their short-term requirement from the gold. If you talk about MSME segment, that has also reasonably growing. Affordable housing, because of the push of the Pradhan Mantri Awas Yojana again, the demand we are seeing clearly, that segment is also growing. We grow almost 35% year on year in that segment also. So overall, it has been a very good quarter, and the joy has come from increasing our margins, and we have declared all-time profit after tax, which is about 236 crore.
Mr. Sharma, when you speak about how gold loans have now become 40% of your total AUM, do you expect it to remain at those levels? What kind of growth levels are you looking at here? And RBI has now eased the norms, right? So how much of the gold portfolio falls under that 2.5 lakh rupee ticket size? If you can give us some numbers there.
So the portfolio about 2.5 lakh rupees will be about less than 30%. Majority of the portfolio sits between 1,25,000 and 2.5 lakh rupees. And that also because in recently last 2 years, gold loan prices almost have doubled. So the ticket size have gone up only also because of that. The gold loan prices have seen a run in last 2 years, almost 100% jump have come. So we see that if gold loan prices keep pushing like this, I think more portfolios start shifting from beyond 2.5 lakh rupees, where we have to assess the income and underwriting of the borrowers.
Understood that. The other part of the PNL that we were looking at is the other income portion. It's growing at a strong pace, doubled on a year-on-year basis. Co-lending is something that has clearly aided you. Going forward, what will be the ideal mix for you? Do you feel as a proportion of the total income, co-lending will continue to grow higher?
So in the total income, there are various fee segments. There is income from sale of the insurance policy to our borrowers. There is a car loan which we sell for our third party product, being about 12 partner banks, where we sell. Last year we sold about 1 lakh car loan and generated a gross fee income about 240 crore rupees, a significant amount of income. So there's a huge focus that how do we deliver a ROE between 2 to 2.5% purely from the fee income, and that also differentiate others from our competition. So their fee income include car loan distribution income, insurance distribution income, and co-lending income. As regards co-lending, about 20% AUM the lending is a very wonderful product where the low cost fund of the bank and collection efficiency and underwriting capability and the reach in the rural segment of the NBFC do collaborate with the lender, and ultimately customer also benefit. As far as the company is concerned, we need not to provide any capital for that.
Got it. Mr. Sharma, you briefly spoke about MSMEs as well. Just want to understand, is there any pressure point? Are there any pressure points that you are seeing in that particular space? Because that has been a concern, right, for lenders generally. Your credit cost, you said you'll remain at 90 basis points this year. Do you stick to that? If you can give us some more idea on what are the constituents that you're looking at to keep that credit cost at those levels?
So while generally speaking, this MSME segment in the unsecured have shown a lot of stress. And if you talk about the collateralized segment, in some pocket, in some profile where the tariff have caused those exports slowing down in the textile hub or the gems and jewelry and other aspects, in those clusters, we have seen some stress going up. But barring that, in the collateralized segment, especially in the segment ticket size of 20 lakh rupees, we are not seeing much in, barring those clusters I mentioned are affected due to the exports is slowing down.
Understood that. So in terms of NIMs as well as ROAs, what is it that we should aspire for by the end of FY26 and FY27? How is it looking?
So 26, 27, definitely ROE we are targeting not less than 4%, and which is visible. If you look at the quarter specific, our ROE had touched in that zone. And despite the large amount of capital have come by way of QIP, we are able to reach a ROE in the range of about 15%. And I think next year will be much better. We should be able to target a ROE in the range of about 16.5 to 17%, and overall ROE in the range of 4% plus.
Okay, Mr. Sharma, a lot more questions, but completely out of time today. But it was a pleasure speaking with you today on the quarter gone by, but most importantly, the outlook going forward for the company. With that, we'll do one thing. We'll slip into a short break.